uh, things. Do you have problems in filing 3CA, 3CB, and 3CD? We don't have. Okay, if we have problems, then our next topic for the day, practical problems encountered while filing 3CD, 3CA, and 3CB. And our popular and eminent speaker, I think, who does not require any introduction, and he has also requested me to shortcut his not having any introduction, but a few lines I will speak on him. And before that, I request our chairman to escort the speaker of the day, session, Naveen Khariwal, sir, and welcome him with the floor bouquet. Naveen Khariwal G is a family of chartered accountants, from grandfather, father, brother, and specializing in direct taxes. And he's member in various committees of ICA and other bodies like FKCCI, FAC, and many whatever bodies in direct taxes in India. He's a member of things, and he's a speaker almost 46 branches of ICAI and other forums like uh, CIT, ITAT, and speaker at various FKCCI, Chamber of Commerce and Industry, and many other places. He's a keen cricketer, having represented college and university matches, and he has represented Bangalore branch of ICA also at the national level in cricket. With this brief introduction, I hand over session to the speaker. Welcome you, sir, on screen.
Thank you, Chandra Prakash, for your introduction. Thank you, Girish. Now, this is the 5th time I am speaking under the captainship or chairmanship of my beloved chairman, Srinivas T. In the morning, I just happened to address Pondicherry branch on the same topic. Then I caught a flight at 1:50, reached here at 2:50, and sat in a car and came here. Because my chairman was of the opinion that the climax has to be, addressed by me only on this tax audit seminar. Now, Madam Annapurna Kabra would have taken you through class 44 also. I may have got different opinions also than the members or other than the students also. Anyway, the views we are going to exchange anyway. I would also, before commencing, like to congratulate my chairman for the successful conference, state level conference. More than 1,100 delegates have attended from all over the state. And post-COVID, that is a really, it speaks of the hard work, dedication, commitment put in by effort day and night by these committee members, led ably by our leader. Now, first things first, my dear friends, what is happening now? 3CD. Take class 21G, contingent liability. Wherever want, you can interrupt and ask any question on any of the classes of 44. I may be in 21G, you feel like asking on 35A traded goods, you can ask, no problem. Let me update you with the latest topics. 21G contingent liability. What is happening? We are writing in notes to account contingent liability. In case of PSUs, government units, banks, etc. It is all in the air contingent liability. I am making one contingent liability. It's not a provision as such. It's a contingent liability, say 10 crores. It's not debited to my P&L account. I have not created a provision as such. It's only a notes to accounts. But what has happened in 3CD, in that class 21G, they said disclosure is required. I make a disclosure. I have created a contingent liability of 10 crores. Intimation will come, sir. Addition will be made. Unfortunate. Because the system will not understand. And then when the addition is made, you have no choice other than to file an appeal. Against the intimation passed under 143(1), You will have to necessarily file first appeal with the Commissioner of Income Tax Appeals under 246A of the Act within 30 days of receipt of intimation. First problem. Second problem, come to 16D, 16E. What is the problem? What is 16D? Any other item of income not credited to P&L account. If you go to my capital account, there may be various credits, sir, like rent received, dividend received, FD interest, RD interest, LIC maturity, gift received, etc., etc. There are two columns, 16D, 16E is capital receipt. Unfortunately, I have filled up everything there. I want to, give a disclosure, not a disclaimer. I am not a fan of any disclaimer. I am a fan of the disclosure. If you see in the conference, the president had come ICA, a lot of central council members, I was just discussing with them. They are telling, kindly don't advise people to do disclaimers. Please advise them to give disclosure to the extent possible. See, they have brought out a beautiful guidance note. We have to really commend the members, commend the institute. They have brought out a beautiful guidance note actually. So what the members, the central council members, as well as the president of ICA is of the opinion, they are telling, please give disclosure to the extent possible. I am not telling to give 100% correct disclosure. Kindly don't give disclaimers. Anyway, we will see how to fit in it. So 16D, any other item of income not credited to P&L account. For example, rent is credited to capital account. It is offered to tax under that income from house property. Take FD interest, RD interest, PPF accrued interest, agricultural income, etc., etc., offered to tax under respective heads. Unfortunately, intimation is passed. They have taken all these items of income, added to business income. It becomes a double addition. So what I have to do? I may file a rectification. Sometimes they are accepting, sometimes they don't accept. They send an order under 154 raising the same demand. Sometimes, I have to revise my tax audit report. Is the revision under tax audit report possible? There is an amendment on Rule 6G3 from 1st of April 21 saying that tax audit report can be revised only up to the end of assessment year. That is the rule. Nani Palkewala said law and practice. What is the rule? What is the amendment in rule with effect from 1st of April 21? My dear chartered accountants, you can very well revise your audit report, but not before the end of beyond assessment year. For example, this year's return, I am telling you, those who are in tax practice, you can't file any return after 31st of December. That is the due date. You can file a belated return, you can file a last return, you can file a revised return, you can file the original return, not beyond 31st December, unless it is an updated return in terms of 139(8)(a) of the Act, in terms of ITRU, in terms of 140B. Beyond 31st December, tax auditor will have no work, sir. Tax office will have no work. You can't upload any return unless the due dates are extended. So what they are telling here, that audit report I told you. But in practice, I may very well be able to revise my tax audit report or my 3CP, maybe for the last 6 years also. Not only this year, maybe for the last 6 years also. That is in practice. But this is the rule. So now, wherever members, few people have tried rectification for 16D, they would have met with success. No problem. Other members would have revised their tax audit report. You would have met with success. But there is a practical problem there. The schema changes every moment, every day, every week. When the schema keeps on changing online, I cannot revise my tax audit report. It will stop me from revising. Therefore, only other option is to knock on the doors of the faceless appellate commissioner. Necessarily, you have to file an appeal. My office filed an appeal. Within a span of 15 days, I got an order also. They allowed my appeal online. But what the faceless commissioner, Honorable Commissioner of Income Tax, Faceless Assessment, Delhi, he told that the appellant has claimed PPF accrued interest. You have claimed your FD interest, etc. You give proof. Submit proof. He directed the assessing officer, call for the records. First he agreed. No doubt, it's a double taxation. Already they are offered to tax under the other sources, house property. It is a double taxation. But the appellant has not filled the return of income correctly. They goes on to tell in a paragraph A01, there is a column. You should have added there and again reduced there. You did not do it. You did not fill the return of correctly. No problem. But anyway, you are offered to tax. There is no loss to the exchequer. So he has directed the assessing officer, please call for all the records, verify, then allow the appeal. So this is the problem now appearing in 16D. Kindly file an appeal. You have not filed, file it with condonation. File it with condonation. There is no problem at all. Now, so 21G we discussed, 16D we discussed. Now we'll spend some time on other clauses also. So this guidance note, this is the updated PPT based on guidance note on 22-23. Now, long back, Supreme Court has held in TD Venkatarau's case that chartered accountants are a brand apart, a class apart. Only these guys can do the audit. It was held long ago in 80s. It is not the story now. Don't be overconfident now. Because we are, sorry to say, the government of the day does not have a good opinion about the chartered accountants. You give more disclaimers, the opinion is going to change. Bank audits have reduced drastically. GST audits have been abolished. Now the government is going to ask when my PAN, bank, the Aadhaar, etc., everything is linked. I have got more than 50 types of information on AIS, TIS. Why on earth is tax audit required? When all the chartered accountants, you are all filling nil, not applicable, nil, not applicable. And plus you want to give disclaimers. So be careful. Why I am telling is I cannot take my monopoly for granted now. 5 years back on 1st of July 17, Modi ji came on television. He did tell what? Your signature is more mightier than my signature, more powerful than my signature. Fine, sir. So you have to keep that monopoly means what I'm telling. We have to do our work, sir. You can't tell nil not applicable, nil not applicable. And again, don't run away asking for time. Let the client ask to their Chamber of Commerce. Let them ask to their other organizations. We should not go and ask for time there. That means we are, lacking there. They are telling, oh, that means you are not prepared. We are very well prepared. We should come across very well prepared, and we are going to do our work within time. So this is there long back. You need not rely and be proud of that section. I mean, that case law Supreme Court judgment. Times have changed now. We are in 2022 now. Move forward. Quickly we move on to the classes, and then, class 44 also I can give my own opinion also. And at places, one compliance report has come recently, I think in June 22, very beautiful, just 70 pages. What the institute is telling, whatever mistakes you have done in tax audit report, common mistakes, they are telling that. That also I have incorporated in this slide. So whatever mistakes they are telling in these classes, they are all common mistakes. They brought out a beautiful guideline. They are telling kindly don't make these mistakes, repeat these mistakes. Now, so let me start with, the 3CD. Yeah, 3CA, 3CB, 3CD. What is 3CA, sir? Was it discussed in the morning, all issues? 3CA, 3CB? All are discussed, 3CA. So 3CA is like your covering letter. Audit is done, say, under LLP Act, where turnover is more than 40 lakhs or capital is more than 25 lakhs, etc. Audit is done under LLP Act or audit is done under Companies Act. Then here you need not do the audit. You tick third proviso to 44AB. First mistake institute is telling. All these people who are doing this company audit, you are ticking 44AB clause A. No. Please tick third proviso to 44AB, they are telling. Why? It is audit under any other law. Don't tick 44ABA. Our institute is telling. I have given that paragraph also. I have culled out their observation. They are telling kindly tick third proviso to 44AB, which is appearing there. That is in clause 8. Under which section audit is done. Tick that. Don't tick 44AB clause A. So 3CD, 3CB, 3CA. Now there are two important paragraphs in form 3CA and 3CB, para 3, para 5. What is the importance of para 3, para 5? That is your lifeline. Assessee's lifeline. There are 17 observations in para 3 and para 5. If you have had an occasion to go through, we'll see the observations. This para 3 in 44 3CA, it says true and correct. Where is the question of true and fair, sir? You are using the words true and fair. There is no question of estimation, test check, etc. Word used is true and correct. They are telling para 3, in my opinion, to the best of my information, according to my examination of books, including other relevant documents and explanation. The particulars given in 3CD are true and correct. What are true and correct? That nil, not applicable observations. They are telling based on all this, I checked the books, I checked the relevant documents, all the explanation. Now are true and correct. Now they are telling subject to the following observations. See the qualifications. There are 17 qualifications. All first to 16 are negative qualifications. If at all you were to tick any of them, the client would be hit hard. He would be nailed. For example, the first one says proper books of account to enable reporting have not been maintained. Proper books not maintained. But you went on, did audit, you submitted report also. Books of account will be rejected, sir. See the second one, all information and explanation which to the best of our knowledge and belief were necessary for purpose of audit has not been provided by the SSC. See the fourth one, proper stock records not made available. But in trading account, I have put buy closing stock. You see there, yield percentage not ascertainable. Take the 15th one, GP ratio not ascertainable from financial statements prepared by the SSC. The article is sitting and uploading the tax audit report. Imagine you don't know. We are only worried. We are thinking, act is the Bible today. Rules. Worry only about act, rules, case laws. In my humble opinion today, as much as importance you are giving to the act, rules, you have to give to the system also. Audit is done online, sir. Don't take the system or the computer more than the act. It has to be on par now. You cannot tell only act and rules. What is happening without your information, if even by oversight, erroneously, if they tick all the 16 observations, I don't know. My report is qualified. I don't know what they have ticked. What my office is taking a stand that first to 16 I am not ticking. I am dumping all that, in class 17. All 44 classes, you are having that beautiful notes. You dump it in 17. 1 to 16, don't tick. Because negative observations. Fine. Now I have to give, for example, your 21A. What is 21A? That note you are giving, no, it is not possible to verify whether account pay checks, that checks made are by account pay checks drawn on a bank or not. Sir, that was given 20 years back. Same thing continues. Today, how many checks are account pay checks, sir? Today, there is NEFT, RTGS, IMPS, bank transfer, etc., etc., etc. Same thing we continue. How can I verify the checks? The checks are in the possession of the banker. Checks are issued lying with the banker. Unless the SSC has made a photocopy of the same, how on earth can I verify? Is it a cross check? It is an account pay check? Is a cross check similar to account pay check or is different? So I am giving the same notes over a period of time. And then 40A3, I will finish the discussion here only. 40A3. 40A3 is what? 10,000 is the limit. Earlier, what was the limit? 20,000. So why do you worry? Nothing to worry. What was 18,000, 19,000 will be now 9,000, 8,000, 7,000. Continue in the same fashion. Nothing to worry. Earlier 20,000, so you used to book 17,000, 18,000, 18,000, 19,000. So 10,000 continues, sir, 7,000, 8,000, 9,000, matters. 40A3. Whatever. What is 40A3A? Salary payable, rent payable. This year paid in cash. Moment you pay in cash more than 10,000, disallowance will be attracted and 40A3A carefully note in the books of accounts. So 40A3, except your rule 6DD, those exceptions where, payment can be made in cash subject to exceptions stated in, outlined in, illustrated in rule 6DD. Okay. So be careful. All my humble opinion, kindly give whatever notes you want to give. Please give in para 3, para 5, 3CA, 3CB at 17. That should be your observation and qualification, including your class 44, whatever you want to give. We will see next. Now, class 1 is the name of the SSC, no problem. Name of the SSC, they are telling, give the name of the SSC. If it is in respect of a branch, please give the name of the such branch. Verify all the details available from the income tax portal as well as from the profile of the SSC. Sir, even for filing one personal return, we have to necessarily log in. Please go on the online AIS, TIS, etc. Now for class 44, very, very important. See the processed value, derived value. Answer there. Where GST information is coming online, there are two columns, processed value, derived value. We are just seeing that. We are not bothered. Different figure in trading account, different figure in GST return, different figure online. You have to go there, reconcile, and you have to fill up there. For example, information is there, TIS, AS, etc. 1 crore deposited in current account. 10 lakhs deposited in SB account. Many bank accounts are there. This time I saw the SSCs, many bank accounts have come there. Say one lady SSC, post office account is there. Oh, adu gotaita nimge. Now my husband will know this also. Adu link agoita, adu declare madbeka. I can't escape. All that I took, all that bank accounts, everything I brought it in the books. I have no choice. Government of the day, I have to change immediately, flexibly. Oh, even this you came to know. Yeah, no, there is no, wait, I will open that system, everything, all bank accounts came off. Oh, then they brought the passbook. Okay, declare. Else, my dear friends, based on this, notice will be issued under 148. Income escaping assessment. Up to 3 years, beyond 3 years, up to 10 years. You wait and watch now. Next year itself, you will get a notice. Now the department is doing, they are issuing 142 notice for 21-22. Say one person has sold property, is investing in 54-54F. They have no business. It is not taken up for scrutiny. They are issuing 142 notice. They are telling me 10 points. They are telling me, give me all details of 54-54F. Without the case being taken up for scrutiny. Again, what is happening? Investigation being every person in India, every resident in India, having asset abroad, foreign asset abroad, they are receiving summons. They are telling me, give all the details. You are in Australia. Okay, you have some assets in Australia. You have shares in Australia. They are sending a summons, give all the details. Since the date of inception, they are telling. So these summons are being sent now. Government is taking a strong stance there. Check up everything online. Correlate, coordinate with your books of account. Then hit the button for uploading the return. In case, okay, you came to know later, file a revised return. There is time up to 31st December, sir. Still you came to know. Fine, sir, up to 12 months. Beyond 12 months, up to 24 months. File updated return. After all, what happened? 25% extra interest and tax penalty within 1 year. More than 1 year, up to 2 years is 50%. So then also you can declare. So these are all ways and means. Now, no question of filing a petition before the Principal Commissioner of Income Tax. If you have not filed the return beyond 2 years, you're filing that 119(2)(b), because they'll tell come under 139(8)(a) first. Okay, refund is there last 6 years, then only you go for a petition under with the PC80, etc. Now, so change in name of the SSC as at the end of financial year, please give the detail. Next is your address. Address also as on the date of signing of audit report, what is the address? Is it in respect of a branch? Give the branch address. Company, give the address of the registered office of the company. New SSA, principal place of business. Verify from income tax records and on the portal. Now this mistake, I told you what all mistakes they are telling. Now in this compliances reporting on tax audit report dated 20th June, they are telling while reviewing various tax audit reports, it is observed that the address reported under this class was different from the one mentioned in annual report or registered with Ministry of Corporate Affairs. They are pointing out these mistakes. So be careful. Our institute has pointed out. Let us verify. Next, class 3 is permanent account number. Many our senior professionals are sitting. Earlier there was GIR number. Now there is alphanumeric, this 10-digit PAN allotted under alphanumeric series PAN number. Now they are telling Aadhaar number. If you don't have PAN, put Aadhaar also. How slowly the importance is coming now. Now, class 4 is telling whether the assessee is liable to pay indirect taxes like excise, service tax, sales tax, etc. Then please furnish registration number. Everywhere with lot of decency and courtesy. Please furnish, please furnish. Please give. Okay, sir, you take. Whatever you want, you take. Please furnish what you want. All registration number of GST and any other identification number. What is any other identification number? Okay, collect all the indirect taxes registration certificates, write down there. That also we made mistake. In that compliance, they are telling, no. In that registration certificate, PAN based, there is some other number. In your class 4, some other number is there. Okay, sir. That cut, copy, paste, what to do? We are in a hurry. Client has come on 31st only. Cut, copy, paste, Excel, import, export, ready, seal, signature. Upload. Now start the audit, they'll tell. Next day. Collaborate Rajasva. Second you come, we'll start. I want to upload now. So anyway, so here any other identification number is what? Customs. Your import export code. Now multiple registrations may be there, multiple GSTN numbers all over India. Fill up everything. Take all the copies. Now these are the mistakes. They are telling registration under all indirect tax laws which has been mentioned in CARO have not been reported under this class. See, they are comparing. See the link now. Even in CARO personal expenses, you would have qualified there 5%, 10%, etc. In Income Tax Act, you are not telling it all, you are not showing it all. So here they are telling all this is given in CARO, details of all registrations and indirect taxes. It is not mentioned in class 4 in income tax. See the link. Then again, they are telling all the registration numbers under indirect taxes, some of which are based on assessee's PAN, did not match with the PAN at all, as reported in class 3. Class 3 are giving the PAN. Some mistake is there, cut, copy, paste, what to do? Class 5 status. What is status, sir? Resident, non-resident. 231 person includes an individual, HUF, firm, LLP, company, trust, AOP, etc. Tick that. Move forward. Clause number 6 is previous year, and then, in case of amalgamation, demerger, reconstitution, your retirement, death, etc., it will change. So it will be less than 12 months. Normally it is from 1st of April to 31st of March. From assessment year 89-90, there is a uniform previous year under the Act. Earlier it was from Diwali to Diwali, January to December, etc. However the assessee felt. But assessment year 89-90, peculiar year, 17 months was the financial year. Why? That time the government came under this. No, we'll have a regular, we'll have a uniform previous year for all the assessees across India. 1st of April to 31st March. Okay. Move forward. Now clause 7. Clause 8 is indicate the relevant clause of 44AB under which the audit has been conducted. 44ABA, the turnover more than 1 crore. B is gross receipts, profession, 50 lakhs. C, D, E, etc. is what? All your presumptive income less than that figure. So you have to go for audit. Third proviso to 44AB, etc. Nothing to worry. So here they are telling again what we discussed. Please tick third proviso and don't tick 44AB clause A. That is what our compliances report they are telling. Because audit is already done on Companies Act 13. Kindly don't tick 44ABA. Please tick third proviso to 44AB audited under any other law. That's all they are telling. Move on to part B, sir. Clause 9. Firm or AOP indicate names of partners, members, profit sharing ratio. Give the names of partners, profit sharing ratio. From 1st of April 21, 45(4) read with 9B is implemented in this statute. They are telling if any part, if there is a change in constitution, what do you mean by change in constitution? Is defined in that section itself. There are existing partners, there are incoming partners, few of them retire, few of them go away, few of them join. And there is change in profit sharing ratio, amounts to reconstitution. So when there is an existing partnership firm, there are existing partners, few of them go away, they retire, few of them get admitted, or there is a change in profit sharing ratio, it amounts to change in reconstitution. What is the significance of the term change in reconstitution? On the day of reconstitution, prepare a balance sheet. You have to prepare a balance sheet. Prepare a balance sheet, distribute the profit, distribute the interest, distribute the salary. Arrive at the capital balance of the partner. Suppose the retiring partner capital balance is 1 crore. The firm has given 1 crore 20 lakhs. Firm has to pay tax on 20 lakhs, not the partner. Specified person, specified entity. Who is the specified entity? Partnership firm. Who is the specified person? The recipient partner. If the recipient partner, the retiring partner, receives even 1 rupee more than what is due to him as per the capital reconstituted on the date of reconstitution, the firm has to pay tax, not the partner. Suppose stock is given, then business income. Suppose capital asset is given, capital gain. Money is given, 30% tax. You can give capital asset, you can give business asset, you can give check. No problem. Formula is also given. A is equal to B plus C minus C. That's okay. What is the moral of the story? Don't give a penny more than what is due to the partner as per his capital. That's all. You give same as capital, no problem, sir. There is no tax in the hands of the firm. So be careful. So when you see here, inadvertently, due to oversight, erroneously, I don't know. See, because there may be a property in the firm, on retirement, on admission, we value that. We, see the value of property. Why you are giving more capital? Probably because there's a property in the hands of the firm. It is revalued, is overvalued or undervalued, whatever. It is valued as per your stamp duty value, etc. Or you are giving goodwill. So that is why, firm has to pay tax. But here, what are they telling? If you are a firm, give the names of the partners, profit sharing ratio. In case of any change in profit sharing ratio or the partners, please give the particulars of such change. But you have to be alert here. Take ICDS, jewelry firm carrying on business of jewelry. Dissolved. When it dissolves, how to value closing stock? Only NRV, sir, not cost or NRV, whichever is less. Earlier cost or NRV, then cost or NRV. As on today, it's only cost or NRV, whichever is less. But today on dissolution, ICDS mandates, please value your closing stock only at NRV. So all these, we have to correct various provisions of the Act. So this is about clause 9. Move on to clause 10. Clause 10 is what? Nature of business or profession. Again, the compliance report is telling, sir, your client is carrying on 4 business. You are only ticking 1 business, 2 business. Why? There is a sector, there is subsectors. How many sectors are there? How many subsectors are there? They are telling if they are carrying on 4 business, for example, tourism, education, hospitality, agriculture, tick everything. Why are you ticking only 1? And again, in that also there are subsectors. How many, sir? How many businesses are there online in the utility? There is more than around 23 businesses are there, 23 types. See, agriculture, computer related service, construction, culture, sport, fish farming, healthcare, etc., etc. Then you see the subsector also, manufacturing, all these principal businesses. Total subsector in manufacturing itself, there are 97 types. Total, I have got 358 types of subsectors. You have to tick everywhere. Then they are telling if there is any change in nature of business or profession, particulars of such change, trading, manufacturing, now you shifted to other businesses, etc., tourism, healthcare, etc. Tick. Give the details. Yeah. Principal line of each business is to be determined and stated in this clause, such as manufacturing, trading, commission agent, builder, contractor, professional, service sector, financial service, etc. Service sector, the nature of each type of service should be broadly stated. Mention the subsector, information furnished in respect of each business. All this given in your guidance note. Change in business should be precisely set out. Change from manufacturer to trader as well as change in principal line of business. Suppose there is permanent discontinuance of a particular line of business. It will also amount to change in reporting. I mean, it will require reporting. Temporary suspension of business may not amount to change and therefore need not be reported. These are all paragraphs in our guidance note. Now this institute has promised that every year they are going to release a new guidance note now, henceforth, which will be updated for that assessment year. Now, move on to the, this is the mistake they are telling our compliances. While reviewing various tax audit reports, it is observed that codes for business or profession for all main activities, principal line of each of the businesses were not reported, but they could be located clearly from the annual report. So why didn't you report in 3CD? So this is one other mistake. Now, very interesting clause. Clause 11, books of account. Books of account prescribed, books of account maintained, books of account examined. Where, sir? Last date they are coming. Extract information, trial balance, import, export, P&L account, balance sheet, put seal, upload. What prescribed, what examined, what maintained? Books of account prescribed. What are the books prescribed for a businessman, sir? For example, there is Neelkanth Jewelers, 250 crores is the turnover. What are the books of account prescribed? No books are prescribed for a businessman either in the act or in the rules. Point number 1. Why are we maintaining sales register, purchase register, journal, ledger, stock register? Is stock register a book? Stock register is not books at all, sir. As given in our guidance note. The section says such books to be maintained as may enable the assessing officer to correctly deduce the income therefrom. So for a businessman, nothing is prescribed in the act or in the rules that such books and books have to be maintained as such. The section says such books to be maintained as may enable the assessing officer to correctly deduce the income therefrom. Then what are the books prescribed for whom? It is prescribed only for specified professionals under 44AA1. That too not only for professionals. It is for specified professionals. Then how many years should I maintain the books? What are the limits? What are the limits, sir? When should I maintain the books? 1,20,000, 10 lakhs. That limit is changed to 2,50,000, 25 lakhs. 2,50,000 income, 25 lakhs is the turnover. Wait. That limit of 1,20,000 enhanced to 2,50,000, 10 lakhs enhanced to 25 lakhs is only for individual or HUF, not for anybody else. For the partnership firm, let me take it, other than individual and HUF, same limit continue to apply, sir, 1,20,000 and 10 lakhs. Only for individual and HUF, limit is increased to 2,50,000 income and 25 lakhs. Others anyway have to maintain books of 144A1 specified professionals. How many years shall I maintain, sir? Under Income Tax Act, how many years? Under Companies Act, how many years? Yes, sir? For Income Tax Act, 8 years. Companies Act? Pardon, sir? I know you are tired from morning, you are being bombarded. What, sir? 7 years. You amend the law, what is there? Go on amending. Nothing to worry. Sir, 8 years, 128 subsection 5 of Companies Act 2013 says 8 financial years you have to maintain the books. Income Tax Act, 6 years from the end of relevant assessment year. Don't worry. Beyond 3 years, up to 10 years, I can reopen. If they come tell, I don't have books beyond 6 years. I destroyed, I threw, I tore, I burned. Why? Only required 6 years. The section clearly envisages 149 beyond 3 years, up to 10 years. If I want to reopen, there should be books, documents, evidence in possession of assessing officer. Else you cannot reopen my books. Don't keep anything beyond 6 years. Don't keep anything. So Income Tax Act, I am safe. But Companies Act, sorry, 128 subsection 5, I told you it will be 8 financial years. Whereas all your minutes, statutory registers, you have to keep from the inception of the company till its death, till it's dissolved. Companies Act is telling from when you are formed, from your inception till you die down, maintain all the statutory registers. Anyway. So whether books of accounts are prescribed 44A, we discussed. List. If yes, list of books. Give the list. Good. Come down. List of books and address at which books are kept. Address at which books are kept if it is in cloud. Give the IP address of the server they are telling. Where it is kept, books kept, give the address. Our articles will write, my CA is doing bookkeeping. All the books are in my CS office. I'll give my CS office address. I am doing bookkeeping also. I am doing return filing also. All the books are in my CS office. I wrote your address. Very good. What is the significance, sir, of this section? They will come for survey at the place where books are kept. And if you give residential address, that survey will be converted into search. Don't for heaven's sake give either your address, your CS address, article address. The article will tell, cash book is in my house, I went for updating. I gave my address also. All addresses they want. Cash book at my address, ledger at CS office, all the documents at client's office. So be careful. The purpose and intent of this class, object of this class is survey. Come for survey. So books, write down the registered office of the company, principal place of business. Don't give the address of the CA. Don't give the residence address of the client. Please go and change today only in the profile. One OTP will go mobile OTP. One more OTP will go for your email OTP. Client will no, I am busy. I can't give OTP. So that profile address will continue to remain. Next year they'll come for survey that address happily. Then you'll tell what happened. You don't have time now. Law and practice. Don't talk only theory. What is there in books? What is practice? What is happening? Today if they come for survey, take a jewelry shop only. 10 kg stock is there, sir. Physically. Physically 10 kg stock is there. In my books I have accounted only 8 kgs. 2 kgs extra stock. 2 kgs extra stock. Market value is 1 crore. Department will tell 1 crore is there. Section 69, read with 115 BBE. Unexplained investments, excess stock. Rate of tax is 60%. Add surcharge, 25% of 60, 15, 60 plus 15, 75, 4%. Secondary higher education and cess. 79, 10% penalty. Why? Because rate of tax is so steep at 60%. They told, I don't want to, loot penalty from you, only 10%. 10% of tax, 10% of 60, 79 plus 6, 85%. Or they came for search, one small notebook you found there. Small notebook, real estate fellow. Or Ashish is carrying on business, real estate fellow. Small book they found in his house. Srinivas, 10 lakhs. Prakash, 10 lakhs. Naveen, 10 lakhs. Anyway, 85% I told you all. If you invoke 68 to 69D, read with 115 BBA, plus these amounts are received in cash, 269 ST, 100% penalty. 269 ST is read with 271 DA. How much? 100% penalty. So 185%. These are all the stand the assessing officers can take. So 269 ST, one more section I am completing, sir. What is 269 ST? Pardon, sir? The SIT, when Modi ji became the premier of this country, within 1 month, he formed the SIT. They told, give me suggestions. to eradicate the menace and corruption of black money, etc. They gave one of the suggestion, don't allow in India any cash transaction beyond a sum of 3 lakhs. Arun Jaitley implemented the provision, reduced it to 2 lakh rupees. So today any transaction, father is giving gift to his son, 3 lakh rupees. He has got source. You have got the gift deed also. Everything is there. But if you give 3 lakhs, oh my dear son, out of my love and affection, natural love and affection, 3 lakh rupees I am giving you cash. Nirmala Sitaram is standing behind him, give me penalty. 269 ST read with 271 DA. Gift per se is exempt, sir. 56 2 within bracket 10. Explanation, you are all relative. But 269 ST, no relative. 100% penalty. Partner introduces capital in the firm, cash account, debit, credit capital account, 3 lakh rupees. Firm has to pay penalty. Why? Firm has received 3 lakh rupees. More than 2 lakh rupees cash. So 3 lakh rupees penalty. We don't know. Tax audit we ignore. Where is the time, sir? Last date he came. Last date he came. I never could check anything. Upload. Hit the button. DSC is ready. Abba, DSC upload. DSC not reading. Tension only. DSC not reading. DSC not reading. Accounts we are not bothered. Tally aitala. So be careful. Partner withdrew cash. Partner has withdrawn. Who are you to ask me? Say, I withdrew my capital. I withdrew my capital, my interest, my salary, my remuneration, etc. If you withdraw 3 lakh rupees in cash, 100% penalty, 269 ST in the hands of partner. Inadvertently, without your knowledge, due to oversight, these provisions will come, sir. Be careful, 269 ST there. Lot of situations are there, sir, 269 ST. Take now 269 SS, 269 T. Acceptance or repayment. Very good. Acceptance, repayment. What? Loan or deposit. Very good, sir. Acceptance, repayment of loan or deposit. One more word is already inserted in the statute, specified sum. What is specified sum, sir? Or specified advance? I enter into an agreement with Pramod, purchase of property, 25 lakhs I gave in cash. Specified sum, specified advance, sir, you have to pay penalty, 100% penalty. This is a violation of SS&T. Whether or not the transaction executed, next year I cancel that agreement. Next year I cancel that agreement, I received back the money. Law is telling I am not bothered. That word specified sum, specified advance is now added in the statute to club the loophole. Why? Shortage. You are all great chartered accountant. Shortage is the books. You have property. Take one agreement. Take cash. Property is there now. Take one agreement. Take one advance. Next year you cancel when you have got sales, etc. If you take that 100% penalty, sir. Now I am telling you, after demonetization, 1st of April 17 onwards, 269 SS&T amendment is also made. We are not aware at all. They are telling if you give money, not acceptance or repayment, if you give money and again you receive back money, even that is covered under SS&T. Be careful. Their limit is only 20,000. Journal entries, they are not bothered. All the case laws are in your favor. Journal entries, they say nothing to do with cash. Except one Bombay High Court which is against. All the, the case laws are in our favor. Nothing to worry. So transaction is say 15,000. Another 8,000 you give cash, it will go beyond 20,000. Naturally all that. So you have to take care by account pay check or etc. etc. So 269 SS, 269 T over, 40A3 over, 269 ST over. Now department is working on a software for these books. Client came. Stock 80 lakhs. Sir, so much tax. Why do you worry? 10 lakhs, 70 lakh stock. Sir, okay, 60 lakh stock. Sir, so much tax is there. Okay, salary increase 10 lakhs. If you do all this now, they are working on a forensic tool which will catch all the adjustment made in tally. With that forensic tool, almost it is ready in the department. As and when they ask you now for a tally records, they can find out how many types of adjustments you have done. How many times the stock has undergone a change, poor stock. Anyway, you are taking no certificate. Stock, how I valued? How did I value stock? You are taking one certificate now. What? As certified by management. Sir, as certified by management, this is the way we do audit, as certified by management. That means you did not check the stock at all. Stock is a material item, accounting standard 1. I am not checking stock at all. As certified by management, I have taken and I have done the audit. How can I write such a line at all? As certified by management. That means I have not checked at all stock. You gave me 1 crore, it was 10 crores. You write. I am giving you certificate. As certified by management. Seal, upload. Disciplinary action has been initiated, sir, recently. Because of that sentence, disciplinary action has been instituted now. You use some techniques of investigation. For example, now I'm doing the audit. I don't know what is the stock is on 31st of March. See the sales for April, May, June, etc. If there was stock, there would have been sales. Or if there is no stock, then it may be overvalued, etc. Sales are there, not there, it is overvalued, undervalued, etc. You just try to some scientific, reasonable interpretation, rational analysis. Don't write like this. Carefully you have to draft now. As certified by management. Some tools you have to use now. Anyway, what are they telling? If books of accounts are maintained in system, mention the books of account generated by such system. Okay. Books of account are not kept at one location. Please. Furnish the addresses of all locations with details of books of account maintained at each location. Everyone we want to attack together. When you come for survey or search. Give me all the addresses and all the locations. Last one says list of books of account, nature of relevant documents. How on earth can I give this? I can give list. Nature of relevant documents. You ask relevant documents, I would have given. What do you mean by nature of relevant documents? I will see purchase bills, sale bills, vouchers, expenses, debit notes, credit notes, your VAT audit report, service tax audit report, cost audit report, rental agreement, sale deeds, etc., etc. How many documents I check? How can I give you the nature of all the relevant documents? I can tell these are all the relevant documents I have checked, no doubt about it. And there is no drop-down utility also there, telling that this is the nature. Anyway, but you can write down all the relevant documents you have examined. For this, what is the mistake, sir? So in case of doctors, daily case register you have to mention. You have to maintain. Daily case register in form number 3C, medical profession, as well as inventory of stock of drugs. Okay. To be maintained for a period of 6 years from the end of assessment year, rule 6F5. Specified profession, legal, medical, engineering, accountancy, architectural profession, technical consultancy, interior decoration, etc. Other notified professions like your film artist, authorized representative, company secretary, information technology profession, etc. Now, we discuss this. 128.5, books of accounts period relating to a period not less than 8 financial years, immediately preceding the financial year, shall be maintained. However, with regard to minutes and statutory registers and records, it shall be maintained by the company since inception. Why? Because the minutes and statutory records are the principal documents of the company and needs to be maintained and preserved. Straight away, I am jumping to clause 44 now. Then we'll come back again, if there is time left. Anybody already uploaded by giving some disclaimers? You are waiting to take disclaimers. Today's seminar will attend, take disclaimers, then we can upload. So clause 44, it came in 18 actually. It came in 18 and it was postponed 4 times up to 31st of March, now 22. Now they are telling you please give the disclosure. Because of COVID also it was postponed in between. Yes, sir. What is the heading? Breakup of total expenditure of entities registered or not registered. Why on earth you want in Income Tax Act? Expenditure of entities registered or not registered under GST. Why in income tax audit you are asking me this question? Many of them have questioned. It may be because of last column, expenditure relating to entities not registered on GST. Because anyway now GST audits are abolished. They want to take some information from this clause 44 and find out that how many, unregistered entities are still there. And probably this may trigger some notices also under the GST Act, if not under the Income Tax Act. Now, breakup of total expenditure of entities. What do you mean by expenditure, sir, here? Have I to see my only P&L account or balance sheet or capital account, etc.? What is your opinion? Have I to see only revenue expenditure? Have I to see capital expenditure? Have I to see deferred revenue expenditure? I am going one step ahead. You have to see revenue expenditure, capital expenditure, deferred revenue expenditure. See even drawings in your capital account. That is also in your business books. Take drawings also, take all the bills, go ahead. In that also, registered, unregistered, give the details. Who told you it should be as per P&L account or as per balance sheet? I am giving only my views. Your business audit is there. You are the business auditor. Entire business books. I am not talking about personal books. Capital account part and parcel of the business books. Therefore, in my humble opinion, take even capital account. If there is LIC paid, does it attract GST? LIC premium? Give here registered or unregistered. It only says total expenditure of entities registered or not registered and GST. That's all. It stops at that. You need not give a reconciliation, sir, between P&L account or balance sheet or whatever. You prepare a reconciliation. So these are the stands taken by various chartered accountants. So expenditure, it may be revenue, it may be capital. You purchase a motor car, etc. Give the details. You purchase a mobile phone, etc. That will also come. Anyway, your revenue expenditure will come. Plus your drawings also, far-fetched. These are all far-fetched arguments, which the department also can take. You have to take all that. Matter ends. Now, is it head-wise, entity-wise, nature, or how will you give the expenditure now? Total only? What is your opinion, sir? Yes, sir. Please tell me. You want to take the total. So direct expenses, indirect expenses, etc. Capital expenditure, etc. Anyway, you have to give a reconciliation. So why break your head? Anyway, you have a beautiful Excel sheet. Any number of rows you can add, sir, in the utility. Take all the expenses and dump it here. Why you want to give only these consolidated figures? Or you have to keep one more working paper in your file? Because your portal, your Winman will allow, any number of columns. So take all the expenditure, give here only detail. There is no problem. Now, total amount of expenditure incurred during the year, incurred, column number 6 says payment. Here it says incurred, 6 says payment. What do? I have to give a note, sir. Payment is construed as incurred. I cannot give only payment here. Payment means what? Purchase of goods, I may give advance. Last year's purchase, I may make payment this year. Current year payment. So current year payment, last year's payment, advance payment, everything I have to give here in payment. How on earth can I give details? There you are asking me total expenditure incurred. Here you are asking me payment. So I will write the word there in my assumptions and presumptions. Payment shall be construed to be incurred, and I am going to give as incurred. I am not going to give payment. Payment also you can have one reconciliation. Sundry creditors as on 1st of April add incurred during the year, etc. Less sundry creditors as on 31st March. Probably that payment detail you may get. It is easier said than done. So therefore, one more assumption that payment shall be construed as incurred. Secondly, total amount of expenditure incurred during the year. Now, one more say is asking that incurred during the year, the two, who told you that column 3, 4, 5, 6 and 7, the total should come to 2? Who told? These are the opinions coming out. I agree with that opinion also. He's asking, who told you, sir, that column number 2, it says expenditure incurred during the year. Who told you that the total should be 3 plus 4 plus 5 plus 6, or rather 6 plus 7? Rather 6 plus 7. Who told you that column number 2 is equal to 6 plus 7? Pardon, sir? There is no clarity. Each one, your view. But give those presumptions and assumptions in the disclosure you are going to make, in the disclaimer. Give both disclosure, give both disclaimer. You see our Srinivas, this one. Endeavor to you all, engage to excel. So with this clause 44, endeavor to involve, engage to excel. Unless you make use of your Excel sheets, expenditure, you evolve from disclaimer to disclosure. Don't have that, negative thinking in mind. No, I will give only disclaimer. Give some sort, make the clause workable. To the extent possible, my humble request is try to fill up the details. To the extent possible, you give. I am not telling 100% I will call out the details. To the extent possible with all disclosures and disclaimers. Now, so these are all opinions. Total amount of expenditure incurred during the year, we will go by the humble, the simple opinion. This 2 should be equal to that 6 plus 7. Because that expenditure incurred, I have to put somewhere, either in registered or in unregistered. Next, provision, bad debts, depreciation, loss on sale of fixed assets. Provisions you want to take or you don't want to take? Pardon, sir? Pardon? No. Now you take the balance sheet, you have to fill up somewhere now. That's all. You come to it now. Where shall I fill up? That's all. There is no time now. I have to start the tax audit from Monday. Take that provision. Shall I fill up? Don't fill up. If you want to fill up, dump it in 7. If you don't want to fill up, don't fill up. You write there. Other than provision, bad debts, depreciation, etc. Bad debts is also, is it an expenditure? Is depreciation non-cash item, non-finance item? They are telling depreciation, bad debts, more or less all over India. The speakers are telling bad debts, depreciation, provisions, don't take. Because they are telling registered, unregistered, etc. What is the feel of the clause? The feel of the clause, what is telling? Breakup of total expenditure, registered or unregistered. That's all. So don't give all these details. Now people are asking, sir, provision, you don't want to give provision for audit fees. Next year when he makes payment, this year you told don't give provision. Okay, I will not give. Next year when you make payments or audit fees, naturally it will come registered or unregistered. Or it will be debited to that provision account. These are all various pitfalls here. When you go further, don't break your head. Provisions, bad debts, depreciation, loss and sale of fixed assets, etc. Don't give. Move further now. Relating to goods or services exempt. Composition scheme relating to other registered entities. Then total payment to registered entities. What beautiful disclaimers. Under GST law itself, not required. How can I give an income tax act? Who told you, sir? Section 35 of GST Act. Sub-rule 56.1, 56.4, 56.14 of GST rules. Clearly they are telling you have to maintain the details of inward supplies, etc. You, all of you know, you have claimed correctly ITC. But I can't give the details. But everybody has claimed that. Don't tell that, it is not required under GST Act. Who told you? There is penalty also. If you see here, Section 35, accounts and records under GST Act. It says shall keep and maintain. You are bound to keep, sir. There is no question of any turnover there on GST Act. 10 lakhs, 20 lakhs, 50 lakhs, then only you maintain. Section is telling, sir, shall keep and maintain. B, inward and outward supply of goods or services or both. C, F. Such other particulars as may prescribe, go to rules. Go to rules. 56, maintenance of accounts by registered persons. What are they telling? See, rule 56, sub-rule 1. Goods or services imported, supplies attracting payment of tax on reverse charge. Then sub-rule 5A, name and complete address of suppliers from whom he has received goods or services chargeable to tax under the Act. It is given under GST Act. Don't write blindly there. Who told? It is not required at all under GST. Therefore, I can't give details in income tax. Very carefully, we have to give the disclaimer. To the extent disclosure, to the extent disclaimer. Then they are telling E, sub-rule 14, E, the names and address of suppliers from whom he received the goods or services. You are still adamant. I will not give, whatever happens. Okay. Implication of non-maintenance of books under as per GST provisions 35(6) and 125 general penalty. Their proper officer shall determine the amount of tax payable, etc. Then general penalty, they are telling any person who contravenes any of the provisions of this Act or rules, etc., for which no penalty provided under this GST Act, liable to pay penalty which may exceed 25,000 rupees or more, just for your information. Now multiple registrations, GST wise, entity wise, branch wise, etc. Give all the details. We discuss that. Now expenditure versus provision, purchases, etc. Assets, bad debts, etc. So what the bad debts we are telling? It is not service. It is not supply. So it may be a loss, but it does not require any reporting. If at all you want to give reporting, dump it in last column, sir. What about depreciation, etc.? Next. Expenditure relating to goods or service exempt from GST. Value of all inward supply of goods or services which are exempt from GST is to be given. She explained beautifully. 2 within bracket 47 defines exempt supply. There are 3 limbs. First is exempt supply, means attracts nil rate of tax. First limb may be wholly exempt under the IGST Act, etc. That is under section 11 of CGST Act and section 6 of IGST Act. And then it includes non-taxable supply. This is the meaning of exempted goods. Your exempt supply, basically. What are exempt supplies? Host of notifications there. We need to go through that. Now, exempt supply also includes non-taxable supply. What is non-taxable supply? That is also defined. It says non-taxable supply means a supply of goods or services or both, which is not leviable to tax under this Act or under the IGST. So, non-taxable supply includes supply of goods or services not leviable to tax under CGST as well as the IGST. Section 9(1) of the CGST Act. Supply of alcoholic liquor for human consumption not leviable to tax. Therefore, it is an exempt supply. Similarly, section 9(2), petroleum, crude oil, high-speed diesel oil, motor spirit, natural gas, aviation, turbine fuel, etc. shall be levied from the date as may be notified, till today not notified. Then Schedule 3 of CGST Act. All this information, from where you can cull out information. Schedule 3 of CGST Act lists out all activities or transactions which are neither supply nor goods or nor services. And therefore, this expenditure need not be reported anywhere in columns 3 to 7. Like, for example, your salaries. Salaries, your even bonus, ESI, PF, etc. Don't report. If at all you want to report, where will you do? Column 7, you put it, that's all. Yes, sir. No, if you want to put, sir, you put in column 2 and column 7. Expenditure incurred, that is what, everything is same. That further has to be bifurcated between registered and non-registered.
But in the software, we cannot fill in the figures in column 2. It is the summation of column 6 and 7. We can only fill 3, 4, 5, and 7.
Okay, that is automatic, you are telling.
Yeah.
Okay, no problem.
That is the issue we are facing.
Got it.
How do we proceed, sir?
No, as the software allows. As the software allows. That is all. Yes, you understood law and practice. Now, Schedule 3 transactions. Sale of land, sale of completed building, employees, ICs purchases, purchase of goods within customs warehouse, drop shipment purchase, etc. They are neither treated as supply of goods nor as supply of services. So basically, we are trying to grapple with all these issues. Next year, I am telling you the columns will change again. Clause 44, all columns will change, sir. Don't worry. Only this year, remember. Next year, those columns will undergo a change. See change. We will see next year again. This much confusion is enough for this year. Now, entities falling under composition scheme, column 4. Includes the amount of expenditure incurred from composition dealers. Who is a composition dealer? He cannot charge GST in the invoices. The fellow can't make, interstate supply. He can issue only bill of supply and he cannot issue a tax invoice. Also, the fellow should have mentioned at the top of the bill the following words: composition taxable person not eligible to collect tax on supplies. For example, who cannot opt for a composition scheme is manufacturers of ice cream, pan masala, tobacco, etc. Or your person engaged in supply of non-taxable goods and GST law, petrol, diesel, natural gas, alcohol, etc. Actually, this help we could have taken from GSTR 3B table 5. But when I go to that GST returns, there it is not mandatory. All this I could have taken from there. This is theory. Practice is what? Reality. Nobody fills up. Client will also not fill because it's not mandatory. CA will tell what you filled is enough. This is not mandatory. Don't fill. If I had filled up that, easily I could have exported those details here now. Now I can't because it is nil. So now you have to advise or go back to the office, plan out strategy. Already 6 months are gone for this year also. September 30th, you can't do anything over 6 months. Next 6 months, you have to change, update that master data. I will tell you how to update, where all, what all columns should be updated. That also I've got in the slides. So that accounts are updated, if client will start maintaining, then at the end of the audit period, you can get the details as required in column 44, but next year columns will change again. So this is the practice. So reality, I'm telling you, this is the problem. Practice of not recording GST of the composition supplier. Move forward. Expenditure relating to other registered entities, column 5. So value of all inward supplies from registered dealers other than supplies from composition, exempt, etc. are to be mentioned here. Expenditure to be inclusive of GST or exclusive of GST? What, sir? Inclusive. Exclusive. Huh? Now I decided he's telling I will not fill it all. Disclaimer, pakka. Exclusive or inclusive, sir? I have to follow inclusive method of accounting, exclusive method of accounting. 145A has already come. Very good. He's telling you have claimed input tax credit. Don't give. If you have not claimed, you give. Or if you are following inclusive method of accounting or exclusive method of accounting, normally what we are doing, sir, normally 99% all over India, you are all following what? Exclusive. One separate account is there. Whatever received is credited, whatever paid is debited, net only we are taking. We are never taking it is inclusive. Continue to follow the same logic. Why you want to break your head and tension for this class? So why all this required? Because a lot of these notes should come. Notes should come. Possibility, now one more possibility is assessee may procure both exempt and taxable supplies from one registered person. So every inward supply from a registered person should be analyzed. And if it is an exempt supply, same should be reported under 3. Only value of taxable inward supply should be reported under column 5. Example, Agarwal and Sons registered entity. Petrol 500 non-GST. Lubricant 100 taxable. Grains 200 nil rates. Milk 30 exempt. This is all from Agarwal and Sons. So what to do? Same person, sir. He's a registered fellow. But based on the billing, based on the items, petrol, lubricant, grains, milk, I have to bifurcate between, you see there under relating to other registered or composition scheme or exempt from GST and total payment to registered entities. Why 2 within bracket 78 of CGST exempt supply also includes non-taxable supply. And 247 nil rate includes in exempt supply. I don't know whether we are able to do this kind of exercise now. So if we just put in registered, unregistered is enough now. We cannot do this kind of exercise. Now total payment to registered entities, column number 6, the language used here is total payment. We discussed that. We will treat it as incurred, matter ends.
If that is the
Let him
case,
do, whether it's liable to be registered or not.
I mean, is total futures and options turnover, if you look at it, will be running around crores, like 20
Let
crores.
it run,
30 crores.
sir. I am talking about expenditure.
And his major expenditure is purchased only.
Is it liable for GST?
No,
Liable, put in registered. Not liable, put in unregistered, matter ends.
I mean, the purchase of that futures and options.
Let it be, sir. Is it liable for GST or not?
No,
No, means don't worry. If you want to put, they are telling registered or unregistered heading. If you want, you give there. Put everything in the last column. Pardon? Securities. Okay. What about electricity charges, sir? Where will you put? Huh? Electricity charges, water charges, property tax. Huh? Non-GST. Property tax. Interest to partners, interest to creditors, interest to financial institutions, interest to bank. Where will you put? Interest to? Interest itself is exempt, is telling. You have to report, sir, interest to partners, interest to bank, interest to creditors, interest to financial institutions. Where will you report? Tell me. Exempt. Okay. See whether those persons are registered, because they may have some properties, they may be getting rent, etc. That fellow is a registered entity. You can do only one audit, even that may not be possible. Okay, correct is telling. Then Bank charges anyway, registered GST. Interest to financial institutions, interest to partners. Pardon, sir? See, each view and all are correct views. I'm telling you, each CA will have different view. Based on his view, based on his assumption, presumption, you take it. No problem at all. Different answer, different CAs, different answers. But based on a presumption, that only save you. So both are required, disclosure and disclaimer. Pardon, sir? I am going to make it workable, sir. I want to make the clause workable. So except for these provisions, bad debts, depreciation, loss on sale of fixed asset, salaries, etc., we would like to take all the expenditure, be it capital, be it revenue, be it your deferred revenue expenditure, etc., trying to fit in the registered or unregistered column wherever possible. So if I don't want to take this chapter 3 also, schedule 3, I'll write all that points, presumption, exceptions. All this I'm not taking karke. You can go ahead, there is no problem at all. Because the system, when once this column becomes bulky, that last column, it may flag and it may be taken up for scrutiny, nothing to worry. That reconciliation anyway you have, based on your this one, we have given the details. But there when I take that unregistered, in Income Tax Act, what is the position, sir? GSTR 2A. What is GSTR 2A? All unrecorded purchases, partially disclosed purchases, etc., partially recorded. From that also I can get the information. Suppose you check GSTR 2A, so many expenses are not recorded at all. What are you going to do? How are you going to advise the client? Not only for filling clause 44, it becomes undisclosed expenditure. What will you do? Please ask the client immediately, reconcile. He may tell, no, sir, this is wrong. Okay, give me confirmation or give me certificate. Or he may tell, no, yes, sir, I have done karke. But I have not disclosed in my books of account. I have not recorded in my books. All this is already available on the portal, sir, in the public domain, in the GSTR portal. GSTR 2A, most dangerous. So Income Tax Act, they may take that unexplained expenditure. 69C, 60% tax. So what is your opinion? How do we tackle? Come to practice now. How to tackle, sir? Pardon? What? Surrender COP only. I can't sign surrender COP. I should have, after 3 speakers I heard, I should have left. Why did I attend last session? Up till that 3rd speaker, I was ready signing the report. Now after the 4th speaker, I don't want to sign. I'll go and surrender the COP. Accounts, sir, now accounted in books now. Drawings is there, no? Put somewhere. If cash payment is made, careful, 40A3. 40A3. So therefore, put it in drawings, sir. Even let it be cash payment. No problem. I am not claiming as expenditure. If I am claiming as expenditure only, that disallowance may be made. Somehow I want to account it now. That information is gone. I am not telling, sir, that is 100% correct. There may be some mistakes also there. So please see all this. Yes, sir? These are all the pitfalls in this reporting of this class. Now, one more view, the CA is taking that. Who told you that it should be only incurred? My view is that information to be given in column 6 is independent of 3, 4, 5, and I will show only payment to registered person here. Heading says payment to registered, I will show only payment to registered. They are telling you independent of column 3, 4, 5, 6. Your view. That view is also correct. It was not possible at all. Okay. So that default will come, you are telling. But these are the views they are telling. Why? He's telling why? I will give payment only. He is thinking this is independent column, independent of the 3, 4, 5, 6. Anyway, these are all views, different views I have collected. I have just put it there. You can take any view you want along with disclaimer, disclosure with disclaimers. Now, moving further, sir, expenditure related to entities not registered under GST, column number 7. Value of inward supply of goods or services received from unregistered person should be reported here. Include here import of goods or services, etc. Expenditure which may be treated as from unregistered person, maybe from registered person, blocked ITC, etc. Supplies under RCM, composition supplier, exempt supplies from registered person, check table 5, etc. GSTR 2A, all that we have given. And guidance note also says it should be ensured that total of column 6 and column 7 tallies with the amount mentioned in column 2. Guidance note is clear, sir. Para 82.14, 13, etc. Guidance note is clearly telling. Please see to it that the column 6 and 7 matches with the column 2. Yes, sir? Exactly. Exactly. Yes, yes, yes. Mentioned. You can take, holistic view. Take a holistic view and go ahead. Nothing to worry. It can be very made workable, sir. I cannot go too much into detail. But can't I give registered and unregistered? What is the problem? Serial number, total expenditure, then registered, unregistered. Under registered, only 3 columns: exempt, composition, registered entities. They're unregistered. Client, after this torture, you want fees? You took so much, you tortured me, took so much details. Clause 44. So this is again. Move on to the next clauses. These are all various clauses. Pardon, sir? Now this GSTR 2, etc. I have given. Now what I am telling you, you please see here how to update now. Now I told you it may be noted tax audit report consists of 2 parts, true and correct and not true and fair. It means that it doesn't leave scope of estimation or correctness to a major extent. In short, if the auditor is doing estimation, it would be better to give disclaimer rather than disclosure. See, there are various disclosures now. You take all this, mix everything. You can alter, amend, delete, etc. To your assessee has not maintained the details in proper format as required in 44. In the absence of this, we are unable to give the details as required in clause 44. Considering the nature of business and volume of transactions, it is not possible for us to verify and give the details as required in clause 44 of tax audit report in 3CD. Assessee has not maintained details as required in clause 44 of tax audit report in 3CD. In view of this, we express our inability to report the same. Details as required in required format clause 44 are not maintained by the assessee. It is told that the assessee is not having proper system and manpower to compile and report the same. In view of this, we are unable to give various types. The software and accounting system of the assessee is not properly designed so as to maintain and give the details in the format as required in clause 44. Assessee has given the submission that they are not having the proper system and manpower to compile and report the same. You write all these things under the GST Act, nobody can stop them. No, notices will be issued, penalty will be issued. Show cause notices will be issued. Somewhere or the other, they have to. Assessee has given submission, they are not having proper system and manpower to compile and report the same. Considering the nature of business and volume of transactions and submission done by assessee, it is not possible for us to give details as sought in clause 44 of tax audit report in 3CD. Even though you want to fill up also, we have to give the disclaimer. Same could be as under total expenditure, as you told rightly, he pointed out what you want us to disclose, you tell me, that's all. What you want us to disclose, what you don't want us to disclose. The total expenditure has been taken by excluding the amount of depreciation, salary, wages, bad debts, etc., which are not considered as supply within the meaning of supply under GST Act. Give one sentence. The figures in column 6 of clause 44 have been taken as total of 3, 4, and 5. Word payment has been taken as accrued, incurred. Some simple thing I'm giving. I'm making it very simple, sir. At the end, I'll take all this. I'll not disclose all these items. I'm giving notes. Some 6, 7 notes I want to give. So that my assessee is safe, I am also safe. Now, whether disclaimer tantamounts to penal consequences of ICI or income tax department, 271J is there. incorrect tax audit report and incorrect certificate. Each such error, each such incorrect tax audit report, incorrect certificate, 10,000 is the penalty. Today it is only 10,000. If they add one more zero tomorrow. Anyway, so it has been provided in the guidance note that where the assessee has provided reason for not being able to provide details, same may be reported if found appropriate. Details required is, voluminous and bulky data. See, Mukesh Ambani was sitting in a board meeting prior to launch of Jio. Reliance Oil. So the word oil, they took the reflection in the mirror. That oil became Jio. Reflection in the oil, in the mirror. So he had a very important statement to make, Mukesh Ambani. The third world war will be for data. Will be only for data, third world war. See this data required in clause 44. I have to call out the data. Basically, I have to call out the data from various sources, various forms. My various books of accounts. Some or the other, I need to call out the data. Under the 7 columns, I need to fit in the data. How smartly you can fit in, nobody can fill 100%, don't worry at all. You cannot get 100% result. How smartly I can give some notes, how smartly to the extent by giving disclaimers, I can give a disclosure. That smartness will help you to complete the work in time and that to a quality audit. Way forward, I told you master updation. You have to update the accounts. GST number of inward supplier, specify composition or regular, tax classification of goods, exempt, taxable. So all these steps are there. GST reports, GSTR 1, 2, 3B, gateway of tally, etc. Nil rated invoices. Here exempted, nil rated, non-GST, URD purchases, composition dealer purchases. You do like this. All these are there. Export these into Excel, add them, etc. I have shared the PPT also. Expenditure relating to registered entities, composition scheme. Tally feature is while creation of the vendor master, all these are there, GST details, etc. If you fill up all these things to an extent, you may give you will be able to fill up the details in clause 44. Now this is the penalty section, incorrect information, reports or certificates. How much time we have, sir? Okay, so some other classes we can do. Few more classes we can do. Now what about this class 37, 38, 39? There are 3 more clauses. Pardon, sir? Clause number 37, 38, 39. What is clause 37? What is clause 38, 39? Sir, clause 37, he is telling me if any cost audit is carried out, you give me the details of disqualification or disagreement on any matter, item, quantity as may be reported or identified by the auditor. If cost audit is carried out, department is very clever, telling if cost audit is carried out, give me information. What information? Of the disqualification or disagreement on any matter, item, quantity as may be reported, identified by auditor. In that cost audit report, you give that detail. Very good. Same thing come to clause 38. If any audit was conducted under Central Excise Act, give me the details if any of disqualification or disagreement on any matter, item, quantity as may be reported, identified by that auditor. Okay. What is clause 39? Any audit conducted under 72A of Finance Act 94, your service tax audit, now no more in vogue. Then you give me the disqualification or disagreement on any matter, item, quantity reported, identified by auditor. The moral of the story is, when I'm doing the audit for assessment year 22-23, have I to give the information of the cost audit, of the Central Excise audit or service tax audit of this year, 22-23? Can I get this report, sir, before September 30th? No. This cost audit is happening of 3-4 years back. Central Excise audit is happening of old 3-4 years back. That audit report you are going to get now in this year. Say 15-16 cost audit report you are getting now. When you get it now before the date of the audit, that is 30th September, that 15-16, in that please see if there is any disqualification by that auditor, that you have to mention here. Clause 37, 38, 39. Even this guidance note is telling the same thing. Information is required to be given only in respect of such excise audit report, the time period of which falls within the relevant previous year. It can be interpreted both ways. telling that it should be only of this year. No, that is not the way. I am always telling you, make the class workable. That means the tax audit report of 15-16 received in this audit year, I'll give the information, sir. If at all there is a disqualification. Similarly, class 17, land or building is sold. Immediately you go and give the disclosure there in class 17. Any land or building is sold, you go and give the disclosure. Who asked you to give the disclosure, sir? Only if the land or building is sold below guideline value. If it is sold at or above the stamp duty value or beyond the stamp duty value, for heaven's sake, don't give any disclosure there. It is not required. The disclosure, what they are asking class 17 is, if that land or building is sold below the guideline value, then only give the disclosure. It is sold at par, at stamp duty valuation, or at guideline value, or at gentry rate, etc. Or it is sold at beyond. Then you need not give the disclosure at all. Clause 17 is crystal clear, sir. But you are going on giving the disclosure? Not required. Now, 37, 38, 39 over. Come to this clause 35, sir. In case of a trading concern, give quantitative details of principal items of goods traded. This is the clause. Opening stock, purchases, sales, closing stock, shortage, excess. This in case of a trading concern 35A. Okay. B says in case of all manufacturing concern, give me the quantitative details of principal items of raw materials, finished goods, byproducts. In that raw material, opening stock, purchases, consumption, sales, closing stock, yield, percentage, shortage, etc. Then finished products. Same thing, opening stock, purchases, etc. Now 35A, if you see in the utility, unit name is there. There are 23 units of measurements. Grams, kilograms, liter, kiloliter, meter, kilometer, etc. Milligrams, cubic, residual. Now clause 35A, auditor should examine whether the enterprise is a trading concern and it's accordingly reported in clause 10A, that nature of business. If yes, you should obtain certificates from the assessee in respect of the principal items of goods traded, balance of opening stock, purchases, sales, etc. And to that extent, the shortage, excess, damage, and reasons thereof. Entire quantitative information should be examined by the auditor from the records. Now the mistakes they are telling. While reviewing various tax audit reports, it is observed that the quantitative details of principal items of goods traded are not reported under this clause at all, whereas trading was reported as one of the businesses of assessee under 10A. Under 10A, nature of business you reported. But here, quantitative details of principal items of goods traded, you are not reporting. Again, in some cases where closing stock of goods acquired for trading was reported as nil, the quantitative details of opening, purchases, and sales made during the year, which are traceable through financial statements, not reported under this clause. Now 35B. 35B is for what, sir? Manufacturing concern. Also you are reported in 10A. So same thing, obtain certificate from assessee in respect of principal items of raw materials, finished goods and byproducts, and quantitative information required to be reported in clause 35B. Information should be given only in respect of those items where it is practicable to do so, having regard to the records maintained by assessee, given in para 72.1 of the guidance note. Now they are giving the meaning of yield, percentage of yield, shortage, excess, etc. What is byproduct, etc. Now here, what is the mistake we are doing? In some cases where the assessee is engaged in manufacturing, percentage of yield or shortage, excess were not reported. Also, the qualification observation with regard to the same was not given in the tax audit report. In some cases, for details of finished products were erroneously reported as raw materials under clause 35BA instead of 35BB. Also, raw materials which are clearly traceable from the financial statements are not reported at all. These are all the mistakes committed in the course of our audit report. What about clause 32, sir? Clause 32A, brought forward loss or depreciation in the following manner to the extent allowable. Now 32, whether a change in shareholding of the company has taken place in previous year due to which losses incurred prior to previous year cannot be allowed to be carried forward in section 79, then assessee has incurred speculation loss furnish the details of the same, incurred any loss referred to in 73A, and then in case of a company, please state whether the company is deemed to be carrying on speculative business as in explanation referred to 73. So here 32. All brought forward losses or depreciation is required to be quantified as per written and assessment orders read with appellate orders if any. Depreciation on goodwill is not allowed, from assessment year 21-22 onwards. Now, section 80 read with chapter 6 read with 139.3. They are telling that 72 business loss, 73 speculation loss, 74 capital loss, 74A loss from owning and maintenance of resources. You cannot carry forward unless the return is filed within the time. Similarly, 32 to unabsorbed depreciation and 71B income from house property you can carry forward even though the return is filed belatedly. So 79, is change in case shareholding of a company in which public is not substantially interested, meaning to say it's a closely held company. So on the date the loss was incurred, on the day there is a change in shareholding, similar shareholding should be there by similar shareholders. Else they are telling, I will not allow you to set off and carry forward the loss. But there is an exception for unabsorbed depreciation. Concord Industries, Sublakshmi Mills, etc. Supreme Court judgment is there. Don't worry, they are saying. Even in case of change in shareholding, you continue to avail 32 within bracket 2 unabsorbed depreciation. Anyway, so these are all reporting required here. Just for your information. Now 31D, etc. We saw that, sir, all this. Your acceptance, repayment, etc. Now see this very interesting. There are 3-4 board circulars for 269 ST. NBFCs and housing finance companies. Board circular is there. NBFC housing finance company as to whether provisions of 269 ST shall apply to one installment of loan repayment or whole amount such repayment. Very interesting. That NBFC and that, housing finance companies, circular is telling, board circular, 3rd July 17. Doubts are there, whether apply to one installment or loan repayment or the whole of such repayment. In this context, it is clarified that in respect of the receipt in nature of repayment of loan by NBFC or HFCs, receipt of one installment of loan repayment in respect of a loan shall constitute a single transaction as specified in clause B of 269 ST of the Act. And all the installments paid for a loan shall not be aggregated for the purposes of determining applicability of provisions of 269 ST. So each installment will constitute one transaction, they are telling, one event. So all these transactions where 269 ST may become applicable, sir. Sale proceeds of goods, 2 lakhs or more, proceeds of services, sale proceeds of mobile properties, fees, remuneration, salary, brokerage, etc. Advance against sale of goods, provision of service, etc. Recovery of loan given, interest received, donation received by trust, advance taken by partner, firm, withdrawal of capital, introduction of capital, issue of share capital, gift received from relatives, non-relatives in cash, amount received by hospitals, educational institutions, etc. Transaction of loan or deposit between agriculturists may be exempt under SS, but other transaction between agriculturists are not exempt under 269 ST. Don't get confused. ST will not save you. Now, clarification or cash sale of agricultural produce by cultivators, agriculturists. See, this is clearly clarifying, board circular is there. No need to get confused. Last 5 minutes before we close, you can see this circular. Representations have been received from stakeholders regarding applicability of income tax provision to cash sale of agricultural produce by cultivators, agriculturists to traders. So sale of agricultural produce by cultivators, agriculturists to traders. Okay. In this context, what is the board circular telling, sir? 40A3 is telling, provides for disallowance expenditure exceeding 10,000, etc. Rule 6DD, there is an exception, which says that under specified cases and circumstances, which will also include payments made for purchase of agricultural produce to the cultivators of such produce. Therefore, no disallowance under 40A3 can be made. Very good, sir. If the trader makes cash payment of agricultural produce from the cultivators. Okay. Now, but 269 ST, he is telling 269 ST subject to certain exceptions prohibits receipt of 2 lakhs or more, otherwise than by account pay checks, etc. Therefore, any cash sale of amount of 2 lakhs or more by a cultivator of agricultural produce is prohibited on 269 ST. 20,000, the 10,000 40A3, they are telling no problem. But I am going to bring you under 269 ST. Cash sale of amount of 2 lakhs or more by a cultivator of agricultural produce is prohibited under ST. Further also, provisions of relating quoting of PAN or furnishing of 60 under Rule 114B do not apply to sale of transaction of 2 lakhs or less. That's okay. In view of the above, at the end, the board circular is clarifying cash sale of agricultural produce by its cultivator to the trader for an amount less than 2 lakhs will not result in disallowance expenditure on 40A3, attract prohibition under 269 ST in case of cultivator, and require the cultivator to quote his PAN or furnish Form 60. Fine, sir. We can take some questions if required now. Correct. Pardon, sir? What is that, class 26?
The 43B section.
Pardon?
Section 43B.
43B, those 7 items are there, no, in 43B. 6 items or 7 items are there. So unless payment is made, it will not be allowed before the due date, as simple as it. You will have to report, necessarily report. And that 3615A, read with 22410, etc., your ESI PF, permanent disallowance, sir. No grace days. Don't tell me all that grace days story now. Even 1 day delay, permanent disallowance now. Be careful, inform the clients also. Otherwise, report is wrong to that extent. It is not retrospective. It is not even it is only prospective. But yes, sir.
And 1.5 we receive it from cash. So again, is
Are
that
you
a
giving that
violation?
check, sir?
Sorry?
1.5 lakhs you already are giving by check.
No.
Then not possible. Question asked is there is a sale, not purchase, because 260 is in recipient sales. Sales are 3 lakh rupees. Suppose 1.5 lakhs is by cash, allowed. Next 1.5 lakhs should be by check only. Less than 2 lakhs, you do anything, no problem. But you cannot tell that one bill is there and 1 lakh, 1 lakh, 1 lakh, I'm going to split, or daily 1 lakh, 1 lakh, 1 lakh, not possible.
So 1.5 is from cash and other 1.5 is
In
from
check, no
UID
problem.
purchases. Say in
No, let it be, sir. There is only one bill or not?
just one bill.
One bill, no. So that bill, basically payment received, is some portion is through cash, some portion is through check. Very well allowed, sir. If it is within 2 lakhs. One bill, you please 3 lakhs it is, take 1.5 lakhs cash, no problem. For the recipient, I am telling, because 269 ST will apply to recipient. Balance 1.5 lakhs, you please take by only banking channel check. No. It is only 2 lakhs. 269 ST is 2 lakhs and above. Yes, sir.
But if we gain or loss, whether we have to report only the unrealized or realized one.
Which one?
Clause 18D2
Okay.
relating to depreciation and assets.
Okay.
So there it is telling change in rate of if we gain or loss.
Yeah. Realized gain and loss.
Realized.
Realized gain and loss.
In ICDS, then there also we are
Again
showing-
contradictory.
But in ICDS it is the realized, right?
Correct,
Not
sir. That's why I told, because ICDS I have to follow, I am bound to follow ICDS.
Okay.
So therefore, I will show only realized gain or loss, whereas I should have shown both realized plus unrealized here. Based on that disclosure, you can give your disclaimer. What is there? Let me disclose. No, both. What is the harmful? I am disclosing everything basically.
One more thing in
Yeah.
27A also is that
27A, mod VAT, sen VAT, I don't know why they have not removed those words at all. They should have removed those words. It's no more there in the statute. 27A, mod VAT, sen VAT is out.
It is there. They
Hmm.
have included input tax credit.
Okay,
Whereas
GST.
in the
GST
previous year
returns,
it was
can you
not
give
there.
those details? Mod VAT, sen VAT still continues.
Yes.
Okay. Yes, sir. Yeah, please.
Can we add a disclaimer that we are unable to report on expenditure from composition dealer and ineligible credits, as the
Why
same is not maintained by the SSC?
Why not? Why not? Beautiful. You can do it because it's not mentioned on the invoice. How I can find out? You only don't know your composition dealer. How I can find out? Yes, sir.
Sir, for any company, say if GST registration is invoked or
GST?
GST registration is suspended by GST portal, then whether we have to disclose that in the tax audit report of the company,
Yeah.
the number will be disclosed in that clause, particular clause,
That there you cannot disclose. You have to disclose necessarily in that para 3 in that observations.
observations. it
Para
will.
5 or para 3 observation. There you
And
cannot disclose.
will it have any impact in clause 44 also?
No, what is that? How do you link it with 44?
The GST registration is invoked. So GST registration is invoked.
Okay, whether they say registered or unregistered, no. So even if I am unregistered, I need to give all the details. Under the Income Tax Act, they are asking only expenditure, whether it's GST registered or unregistered, please give this detail. That's all. Nothing else they are asking. You want to escape by not giving the details. Yes, sir. Any more questions, sir? Yeah.
Whether cash withdrawal by a partner from the firm, the capital account each withdrawal is less than 2 lakh, the total
No
withdrawal
problem.
in
No violation of ST.
Yes.
So he's giving tax planning also. Withdraw less than 2 lakhs. Withdraw daily 1 lakh. Don't withdraw more than 2 lakhs in a day. Fine, sir. Thank you very much, sir.
Well, thank you, members, for your patient hearing. Definitely, it was a one-day, knowledge busters on tax audits. So I hope all the members are geared up for the all tax audit. And from Monday, as Naveen sir was saying, I think all the reports will be uploaded. Well, Naveen sir, thank you for your excellent session. And also, we had a very good brainstorming based on your experience and guidance. Definitely. On behalf of Bangalore branch, I would request Prakash Chand ji to come on this dais and hand over a token of appreciation to Naveen sir. Rather, I should say from on behalf of Belgaum branch as well, because this was a joint program which was conducted with them. Thank you, members. Thank you for taking your time out and actively participating in this event. Well, I think this has geared up for your tax audit season. Thank you, everyone. Good night.